Topic of our today's video is 10 rules for making a successful investment in the real estate market. So you have decided to go for your first real estate investment, or maybe you are already a seasoned investor but need something quantifiable to back your decision. It goes without saying that real estate market is a tricky horse to break. So here's a 10 essential rules for successful real estate investing that you need to follow to stay clear from a loss. Let's find out these rules. Number 1. Understand that the knowledge is power. Knowledge is power. The more you know, the better choice you will be able to make in life. And that doesn't just apply to real estate investing. Don't let others make your decision or push you into taking the wrong path. Discover the truth for yourself, arm yourself with knowledge, and follow your instinct. With regard to educate yourself, you can categorize education into three bands categories. Academic education is the learned in school. Professional education is a practical knowledge that helps you better in your career. And financial literacy is about your using money wisely. It's the last category that is the most powerful when you talk about investing in the real estate. And unfortunately, although it is crucial to have this education, considering the real estate of the world's economy, it is not taught to us in the school or our professional life. For you to differentiate good deals from the bad, you need to independently educate yourself financially, and it will help you to go from being a good investor to a great one. This form of education demands a good understanding of assets, income, and expenses, as well as their classification to determine which can be beneficial. Number 2. Set your own investment goals. You will all know the improvement of setting goals and how it's help in achieving your target. But how many of us actually end up following the goals to the latter? The biggest problem with the particular rules for successful real estate investing is that while setting goals is necessary, few of us make those goals particularly enough to be achievable in the near future. While long-term goals are essential, it's vital to break them down into short-term steps that will eventually help you hit the long-term target. With regards to real estate investing, consider how many properties you want to invest in for a particular year, what cash flow they will generate, what type of properties you would most comfortable with investing, and which city or location you would prefer in the regard. Set practical and short-term goal to attend financial benefits in the long run. Number 3. Make long-term investment. A temporary hike in the market is undoubtedly going to tempt you to invest in real estate for the short term. But every seasoned investor knows that the real estate investments are always made with the long-term appreciation values in mind. Aiming for the short and quick gain is volatile market can actually work against you. Study for the real estate market and the numbers figure out where investing made the most sense and invest accordingly. Ideally consider cash flow, equity in a property and the appreciation potential of any real estate venture before you jump on board investment wagon. However, if you are flipping house, which is always done for the short-term returns, that's the best to keep your eye on the current market. Number 4 on our list is search for properties with a positive cash flow. Cash flow refers to the amount of money moving in or out of the business venture. When you are investing in real estate, you must always look for properties that ensure positive cash flow or the rate of return in the long term. A positive rate of return will be considered to the equity of your property will grow over time due to an appreciation of the property value backed by inflation. Number 5 is choose your location wisely. Every city in the world has its own trend with regard to the real estate market. A quick overview of the H1 report of the Karachi, Lahore and Islamabad would tell you that how differently each market has performed in comparison to the other during the first half of the 2022. Keep in mind that one of the major rules for investing in real estate is that you shouldn't let emotional ties duplicate in your investment decision. You must live in Karachi and have strong ties with the city, but if the property market in Lahore is more profitable, you should base your decision on the return you can recap from your venture rather than staying emotionally loyal to the real estate of any particular city or area. The timing of your investment and the current market trend are important consideration too. That will help you pick the best location for your investment for the long-term returns. Number 6. Take an organized approach for your property search. One of the rules for successful real estate investment is to start your property search from a wider scope and to narrow it down to specific as long as you can. Start the top of the geographical chain and determine which city will be the best for your future investment based on the current trend and your risk appetite. Once city is finalized, study is neighborhood and is like the best one of the particular investment requirement. Finally, narrow it down to the property investment options available in the specific neighborhood with respect to the amenities being offered, proximity to public transport, school, hospital, and real estate trend in the area. Number 7 on our list is diversify your investment portfolio. Diversification generally means investing in more than one market to safeguard your interest. But as a real estate investor, you might wonder how to make it work in your favor. Diversification in this case is location specific. For example, Lahore market was favorable and you have made couple of investment there. For the next few, avoid dedicating all your funds to the same geographical location. Discover if there are untappable real estate opportunities in Karachi, Islamabad, Multan, London, Faisalabad, Quetta, or any city in the world. Find some venture there that are worthy for investment. In this way, even if your market goes south, and you can rest assured that a return will be coming in from other market. You can also diversify with regard to the type of properties. Focusing on resident option is one city as a commercial venture for the next city. This practice helps reduce the risk involved in making an investment in the real estate market. Number 8. Consider outsourcing property management. You have bought and rented a property out. Now you have to choose. You can either manage your portfolio of rental on your own or hire a firm to do this for you. While many of us would choose the former method, seasoned investors often go with the latter because that delegates the task of rent collection and property maintenance to a third party, while the investor is left with plenty of free time to find more properties to expand their portfolio further. There are certain traits that a good landlord must have in order to retain their tenant, and while small efforts can be keep most tenants happy, tackling tenants and complaint as well as finding the right tenant for every property is a job that is best to a professional property manager unless you have expertise and experience required to handle such matters. Number 9 rule on our list is manage your own investment. Always invest in a property directly and maintain physical control over it. You should decide whether you want to rent it, sell it, or wait for a turn in the market. Do not lead toward ownership of the real estate via funds, shares, or partnership. Paper-based investment often make you the owner of the property with none of the rights and authorities of an owner. Be actively involved in your real estate investment. Make your own decision with regarding to the ownership of the property. Number 10. Invest your money smartly. While investing in the real estate, you often have the option of either buying a single property for its total worth or putting it down for a down payment in a fraction of the cost on multiple properties for the same amount. While the first option gives you the chance to own one property, and the second option allows you to own more of them, while about the remaining installment anyone can ask. Well, if you are renting out all the properties which you should need to pay the installment of the tenant will end up paying your installment on your behalf. Let's explain this with an example. You have BKR 1 crore rupees and you can buy one property for the total value for a 20% down payment on 5 properties of the same value, which remaining spending PKR 20 lakh for each. In this way, you are the partial owner of the 5 houses. After you rent them out, the rent can directly be used to pay off the remaining amount in installment. Over the time, tenant will help you owe nothing, and but the 5 properties will give you worth of 5 crore. With one starting balance of just 1 PKR, this is how you can invest smartly into the more properties with limited capital. These are the 10 fundamental rules for successful real estate investment that followed by the all-season investor. All the while acting as guiding principle of investors want to venture in the real estate market. We wish you best of luck for your investments.